going on, everybody? It's Wednesday, May 12th. Couple of announcements. Number one, the Colonial Pipeline has been restarted. So fuel supplies will return over the next couple of days to the Northeast. I know a lot of gas stations in the South, North Carolina, some in Florida, Georgia, Tennessee, all the way out to Arkansas. I mean, they've been hit hard. North Carolina particularly. But the disruption is over. The problem is over. The disruption will be relieved very soon. That's number one. So that's good news. And I think that was part of today's market sell-off too. You know, you had the big inflation number on the CPI. I'll talk about that in a second. But people are freaked out about that gasoline. I mean, the tensions are high. I saw videos of people fighting at gas stations, like fist fighting. And also maybe the Israeli-Palestinian thing, the Hamas-Israeli, the flare-up over there of hostilities, that may be getting people, on edge. A lot of things going on. And of course, you got this very high inflation CPI reading again today. But I'm going to say it, and I know a lot of you are going to roll your eyes. This is transitory. It's going to pass. This is pandemic related. And a 4% reading on inflation. I mean, if you go back and if you look at inflation in the late 70s, when we're looking at 13 to 15% annually, basically where we are right now is, I think, kind of like where we were in 2008 when oil prices ran up to $150 a barrel. I'm not trying to, make like it's nothing, but it's because of the pandemic. Now, the second thing I want to talk about is Elon Musk tweeted that Tesla is no longer going to accept Bitcoin as payment. Remember, back in February, he said they were going to accept Bitcoin as payment for Tesla. Bitcoin shot up. Tesla actually went down on that. I think that's when it hit its high, near 900 or something. So he said that no more because it is too disruptive. It's too bad for the environment. The electricity generation necessary to mine Bitcoin, he said, a lot of that is coming from coal. Coal is the worst in terms of pollution and carbon release, and so they're not doing that. Bitcoin is down on this news. I do not think this is the end of Bitcoin by any means. I still think that cryptos are a manifestation of global de-dollarization, or to say it, and maybe that's too harsh a term, to say it another way, the rest of the world looking for an alternative payment system to the US dollar-based payment system. Speaking of the dollar, it was up again today. I should say it was up. No big deal. So we had a market correction today. Scary CPI numbers. People freaked out. When you think about it, high inflation, I'm not even going to say this is high, but some price increases, that's good for stocks. There are a number of sectors within the stock market that benefit, and generally rising prices mean that producers can raise their prices and expand their margins. Historically, stocks have been an excellent hedge against inflation. And the Fed is not going anywhere. And let me talk about that for a second, because I see so much commentary now about how, the Fed is behind the curve, they're dragging their heels, too much liquidity. Here's the thing, folks, and I'm not going to again explain this is not a liquidity injection. What the Fed is doing in terms of low interest rates, first of all, that's price setting lower, okay? The cost of credit is reflected in the cost of all goods and services. you keep interest rates at zero. That lowers the bar. Believe me, if the Fed were to raise interest rates right now, you'd see inflation really, really accelerate. I mean, that's what Volcker did. That's what they did back in the 70s and early 80s. And it just led to an explosion in inflation because they kept putting the price up. So number one, I said, so the Fed, and then asset purchases are asset swaps. It just changes the composition of the assets in the economy. It is not a net addition, all right? Now, fiscal is a net addition. We saw that clearly in $6 trillion in personal savings out of nowhere. That was the stimulus checks and other stimulus. Asset purchases by the Fed, not only are they just simply an asset swap, you get more reserves, less treasuries. Treasuries are cash equivalents, okay? So basically you're taking away one kind of cash, you're putting in another kind of cash, but also the Fed's taking out that interest income and keeping it for itself and then just giving it over to the Treasury. And you could see that clearly in interest income, which is down significantly this year compared to last year. All right. Here's the other thing I want to talk about. I was flipping through the channels yesterday. By the way, this is on my podcast. I just uploaded my podcast today. So if you go to the link here in the description, please listen to the podcast. Flipping through the channels yesterday morning, and I came across CNBC. Now, I never watch CNBC. It's a stupid show. For some reason, I was looking through the channels, and there it was. And who was on there but Stanley Drunken Miller? Stanley Drunken Miller was on there, and I just caught it briefly, but he was putting up all these charts about the debt and the deficit. This guy's been on this kick now, I'd say going on easy, 10 years. About everything's going to go to hell because of the debt and the deficit. Of course, he's not understanding that the deficit of the government is equal to the addition to the financial balances of the non-government. I mean, I just said that. The government went in deficit, spent out $6 trillion more than it took away in taxes. Where did the $6 trillion end up? In the non-government's financial balances. That's us. Maybe not all equally, but that's where it went. He doesn't understand that. And the debt, here we go again, is just the total amount of government spending minus taxation since the very beginning. And that's 28 trillion outstanding. Those are dollars. That's what we own, not what we owe. And it's held in the form of treasury, so people get a little bit of interest. And really all those 28 trillion represent is a 28 trillion, basically a tax credit. That is untaxed money that sits in the hands of the non-government. We own that throughout the world. But he said something else, and I think I did a video on this once before, but this is almost comical, man. I mean, people should understand it. He said, then he was talking about the trade deficit, the current account deficit. It's huge, right? I know that. That is bearish for the dollar. But he said, that deficit will have to be financed with capital flows. Let me explain something to you. The very existence of a trade deficit or a current account deficit automatically means it was financed. Necessarily means it was financed. You cannot have a trade deficit or a current account deficit without it being financed. Now let me put it in simpler terms. Let's say I go buy a Toyota, Japanese car, right? Import. And I say to the dealer, I go to the Toyota dealer and I say, hey buddy, I want to buy this car. Or better yet, let's say I go buy a Mercedes or a Ferrari, right? And I go to the Mercedes dealer and I say, hey buddy, I want to buy this car. The guy says, okay, buy it. I said, thank you. I drive out of the dealership and I say, I'll be back when I find the capital inflows to pay for this, and I might have to run a deficit with you for a period of time. You think the guy would let me go away with the car? No. The inflow happens at the transaction. All right? I say I want to buy the car. I get a loan from a bank. The bank credits the Bank of Mercedes here in the United States. That is the capital inflow. I get the goods, the car, I drive away. The capital inflow happened at the transaction. It's not like you have to go out. When do we get this stuff and then we have to go out searching for the capital inflows to finance that? Doesn't happen that way. I wish it did. Go get a Ferrari, drive away and say to the guy, I'll be back when I find the capital inflows to finance that. In the meantime, I'm just going to run a deficit with you. I mean, 2 seconds of reflection should make anybody understand this. Anyway, that was Stanley Drunken Miller. I go through this whole thing on my podcast. Check it out. That's it for today, folks. A lot of good. Oh, man. Stocks were on sale today. Big time. Big time. Stocks were on sale today. I did a lot of buying. And everything is fine. Colonial Pipeline back in operation. See you tomorrow, folks. Bye.